welcome to the third episode of Mastering Futures and Options. I am Anushwa Banerjee, and joining me today is Amardev Singh, Senior Vice President, Angel One Research. Now, in this episode, we shall be decoding how to successfully trade weekly index options. So, whether you are new to trading or looking to enhance your knowledge, this series will focus on valuable insights and practical tips. So deep diving into the conversation, there is so much to talk about index options and in particularly weekly options. Now, what are they exactly and why are they so popular amongst traders?
Yeah, I would say that over the last few years, we've seen a significant interest come up in the options and particularly more in the weekly options. So before I get into that, I'll just talk about some of the basic concepts here. So what happens in the index options, primarily when I'm talking about index, I'm referring to Nifty, Bank Nifty, Sensex. So if I look at Nifty and Sensex, so Nifty is traded on NSE, Sensex is traded on BSE. Nifty is made up of 50 stocks and Sensex is made up of 30 stocks. Now what happens here is that you have got futures and options are available. So the futures are primarily monthly contracts, but in options you've got weekly contracts as well as monthly contracts. Again, what happens is that if you look at index, the composition, so primarily financial services, IT, that's information technology, and oil and gas, they compose almost 60% of the weightage of Nifty. Likewise, we have another index called Bank Nifty. So if you look at Bank Nifty, it's primarily HDFC Bank, ICICI Bank, Kotak, Axis, and SBI. These 5 banks together have a weightage of 80% in a 12 banks index. So both these indices, be it Nifty or Bank Nifty on NSE and Sensex on BSE, they have their weekly options as well as monthly options.
That brings me to my next question. Now, what are the key concepts that one should bear in mind when trading weekly index options?
So what happens is that when one is trading options, one needs to understand that these are complex instruments. So you have to have an understanding as to why you are trading weekly options or why you're trading monthly options. And also you need to understand the contract specifications and expiry, lot size of each and every option that you trade. Now coming to weekly index options, say for example, if I talk about Nifty index options. So the weekly on the monthly, they expire on the last Thursday of the month. So the weekly options expire on Thursday, whereas the monthly options expire on the last Thursday of the month. And Nifty has a lot size of 50. If I look at Bank Nifty, so Bank Nifty expires, weekly options expires every Wednesday, and it has a lot size of 15. But the interesting thing to remember is that the monthly expiry of Bank Nifty coincides with the monthly expiry of Nifty. So the monthly expiry of Bank Nifty happens on the last Thursday of the month. So this is an important point one needs to remember. Now talking about another index called Sensex options. So the Sensex expires, weekly options expires on Friday, and it has a lot size of 10. So anyone who's wanting to trade weekly options, they should understand when is the contract expiring, whether he wants to trade weekly options or monthly options, why he wants to trade weekly options. Because weekly options are, as I said, they're extremely volatile. You've got less window of opportunity, means the time period wherein you can hold is less. And also one needs to understand that if you're an option buyer, that means if you're bullish in the market, you buy a call option. If you're bearish in the market, you buy a put option. So when you're buying options, you have to remember that time is your enemy. So there's something called time decay, there's something called theta. So you have to understand that the quicker you can get out of a buying position in options, the better off you are. So these are some of the important points which one needs to remember while trading options.
So can you please shed some light on who exactly should prefer to trade weekly options and why, and what makes more sense, fundamentals or technicals to use when trading options?
Yeah, so coming to your first question is that who's suitable for trading options? So for example, one needs to understand that options, primarily options or futures, these are derivative instruments, these are leverage instruments. So they are not suitable for everyone. So I would say that those who have a risk appetite and those who are willing to learn, because this is a market which is very complex. You can't compare it with the cash segment. So there you can buy a stock and you can hold it till infinity as long as the company is there, you can hold the stock. But in derivatives, what happens is there's something called expiry. It's just like the medicines which we consume, they have an expiry date. Likewise, these derivative instruments also have an expiry date. So whatever you have to do within that window, time opportunity. Now coming to the next question, whether technicals you should use or fundamentals one should use while trading options. One needs to understand that investing and trading, these are completely two different things. So if you are into investing wherein you're holding from a long-term perspective, then fundamental analysis makes more sense. Because you're doing fundamental analysis of the stock, you're doing a lot of analysis on the sector and the economy, and then you invest in that stock for a long term, maybe few years. But when we are talking about trading, so trading could be intraday, it could be short term, it could be few weeks or few months. So in trading, and primarily trading options and derivative instruments, because you're looking from a very short term perspective, their technicals makes more sense, wherein you are trying to gauge the sentiment of the market. You are trying to understand whether the bull camp is stronger or the bear camp is stronger. You are trying to understand what is the trend of the market, whether the trend is up, down or sideways, or these all indications you can get through technical analysis. So that gives you an idea as to whether you should be long in the market, you should be short in the market, whether you should be buying calls or buying puts. So this technicals can help you from a short-term trading perspective, but one needs to remember that since these are derivative instruments, you have to have a proper risk management policy in place. You have to have your stop loss management in place so that you are better off.
Now, I've heard that option trading is very risky and weekly options are even more riskier. So what would you say to traders, both new and experienced ones, on this, and what can they do to be able to mitigate the risks?
Yeah, that's, I think, a very valid question, because people who come into the markets, they come to know that options are very risky.
Yes.
But here I would like to give a perspective that if you can define your risk, then it's not risky. But if you're not able to define your risk, then it's very risky. So for example, what happens because you've got so many traders who are there trading options and they've been there in the market for many years. So what separates the professionals from the amateurs, that is the beginners, is that professionals know when to exit. They know when to withdraw, because it is guaranteed that no one is going to make money in all the trades. They will be losing trades. So they learn how to manage their losing trades. That's the key, because there's a very nice saying that the first loss is the best loss, or one will take the mother of all losses. So if you can define your loss before initiating the trade, you are far ahead of majority of the traders. That's one. Secondly, what you need to understand is when you're trading options, primarily it's all about timing. So you have to be alert, I would say extra alert. And then you stand a chance of making money in the markets. Also, there are rules while trading options. Just like when you look at the game of soccer, it has its own rules. When you look at the game of cricket, it has its own rules. So likewise, when you're trading options, you have to understand what are the basics, what is driving the options, what are the key fundamental parameters. Then you stand a chance, because you have to understand that one who becomes a doctor, an MBBS doctor, he spends 5 years and then he becomes an MBBS. So if you want to be successful in the market, you have to spend time, you have to learn a lot, and then you stand a chance of being successful in the markets. So I would say that you should get scared. Definitely start small. If you want to be even further cautious, you can do paper trading, virtual trading, you gain confidence and then you come. But the real game is when your actual money is on the line. So you have to understand that you have to protect your money. It's your financial capital. So you have to protect your money, but you don't have to be scared, because the moment you get scared, you are in a different mindset altogether. So when you have a proper risk management, you know exactly that how many lots you need to buy based on your capital that you have. Then you stand a better chance once you understand as to how to entry, how to make an exit. And then once you start learning all that, then you are on the path of becoming a successful trader.
Now, to wrap up things, a big thank you to Amar sir for sharing your expertise on futures and options. We hope that you have gained a lot of valuable insights from this episode. Do not forget to click on the bell icon and subscribe to our channel so you never miss an update. Stay tuned as we have much more coming in the next couple of episodes. Thank you so much for watching.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.